The US economy is suffering right now in part due to the housing market and its failed expectations of a recovery. Today we'll discuss how rents have increased and home ownership has decreased as the debt expands to a record high. You came here for the truth, so let me unveil that for you. We're going to get into this today, talking about the housing market, how important it all is. And I want to note a few other points. Let's begin with this right here, just to show you a chart to look at the S&P 500, the pullbacks from the new highs since 1928. So we start off at the Great Depression right here, and then you have more recent crashes with the financial crisis. I want to note that during the Great Depression, we had a nearly 90% drop from its peak. During the Great Recession, as they call it, it's showing about a 60% drop almost. And along the way, during these times here, we've had significant drops along the way. What I have found historically is that the more intervention that does occur, the worse the situation becomes. We can see during the Great Depression there was massive amounts of intervention and a 90% drop ensued. The reason I wanted to mention this was that the more intervention we have, the longer it takes to recover. This chart unfortunately doesn't show back in 1920 when there was a depression. It didn't last very long because there was little to no intervention that occurred. But here there was approximately a 25-year timeline in between this during the Great Depression and by the time it makes it back to where it was. Just keep that in your mind as we go through this video today, as well as into the future. U.S. non-homeowners' expectations for buying a home. So we have this chart here, and it's only a 2-year period. It's showing from 2013 to 2015, and the numbers are significant. You can see this not for the foreseeable future, already a 10% increase in people in this poll right here. The question was, do you think you'll buy a home in the next year, in the next 5 years, in the next 10 years? And so on. Basically goes through that, and people generally don't think they're going to be able to buy a home. Why is that the case? Let's get into some of that. Let's begin to look at the home ownership rate in the US. You can see the trend going downward significantly. What exactly caused the boom during the 1990s was basically consistently lower and lower interest rates. What that does is it forces people in a way to take their money out of the savings and purchase a home, purchase a car, whatever it might be, big ticket items essentially. And that's what led to the boom. But of course, you need to keep that boom going. So what happens is they create all of these fancy types of loans, like the ninja loans, no income jobs or assets. And you have the subprime loans, and you have all this garbage interest-only loans, adjustable rate mortgages, and all of this other garbage that's out there. And it allowed for the most spectacular boom in real estate that was seen up until that moment. So when it all came tumbling down, you would see after these next few years how the home ownership rate simply continued to decline. The amount of homes available is right now, or in these past few years, at an extremely alarming number. They built entire subdivisions. Of course, nobody moved in. And what we had here is the biggest glut in housing that I've ever personally witnessed, except, of course, what we're seeing over in China, but that's not the topic for this right here. Just wanted to show you this, the home ownership rate declining even when interest rates are at the lowest they have ever been historically. That is frightening. Let's move on to what I wrote about in my book. And I'm talking about the amount of debt that is accumulated by any particular government. In this case, happens to be the US. After the real estate bubble crashed in 2008, the U.S. government took over the two largest mortgage companies, Fannie Mae and Freddie Mac. They also bailed out a whole bunch of other companies. Although the official numbers vary, the unfunded liabilities amount to over $60 trillion. That's the USA Today numbers. That is extremely conservative. Even if we doubled that number, I would still consider that to be reasonable. And the numbers are definitely over 100 trillion. John Williams from Shadow Stats calculates these numbers at a significantly higher than 60 trillion as well. There are countless people who have gone through these and calculated the numbers. Depending on how you want to add it all up, determines the unfunded liabilities. We know specifically it's impossible to pay back. Some of those unfunded liabilities that they can keep off balance sheet are Fannie Mae and Freddie Mac, which of course are the subprime mortgages. They took on trillions of dollars of debt, and it's not even really on their books, even though technically it is. And this is all of the bad debt created by these loans that failed to people who simply could not pay. They are renting right now. Speaking of rent, let's look at this. The median asking rent for vacant rent units has been increasing year over year since the 80s. It's been going up. Of course, there have been little ups and downs along the way as we see the boom in the housing market really change things a little bit, but the trend is continuing. Rents are increasing simply because there are more renters now than there were before. We have more people renting that can't afford to buy the home, despite the fact that they are having these lowest interest rates ever. Let's move into this here. Same or a similar chart as we see the median asking rent for vacant lots by regions, simply breaking it down. So this would be a good one if you want to see the region that you're from, and you can see a more detailed look at that. I'm going to move on to this here, the rental crunch. 13 cities where single family rents increased by at least 10% in the year ending in June. Lots of different cities, seems to be spread quite wide right here. And what I want to note is that a 10% year over year increase is dramatic. And then you look at these ones in Iowa, for example, plus 20%. You cannot sustain this for a very long time. The pocketbooks of the individuals are going to be squashed. This is something that cannot continue for a very long time. If it does, you're going to have people who can't buy things at the store like they used to. They can't buy the big ticket items. They can't do what they used to do. That puts a damper on the economy. That basically forces the government to step in. More intervention could occur. We could have more public works projects. We could have TARP type bailouts. We could have negative interest rates being imposed in some way, shape, or form. Or we could have a good old-fashioned QE. Let's move into this, not necessarily linked, but I just want to note because it is important information. We're talking about Austria. I did cover this previously. Wanted to note that this attempt by Austria to slash the cost to taxpayers of this bank, a high-profile European casualty of the financial crisis, by imposing losses on some bondholders, was thrown out by the country's top judges. So essentially they wanted to do a bail-in. Didn't exactly go too well here. In a ruling that came as a relief for investors who feared a precedent would be set for other European bank failures, Austria's constitutional court declared it illegal to have bailed in the debt. Good news overall, but I would say this is not over yet, not by a long shot. So I would keep my eye on this, keep my eye on all of the bailouts that are occurring, or at least the rhetoric, the talk of such, because basically every nation in the world is talking about bail-ins. Let's move on to this one last point that I just wanted to make. China's domestic stock market may be in turmoil, but the country's currency, known as the Yuan or the renminbi, is making seemingly relentless push deeper into the global financial system. There is a currency war. It is taking place today. It is wreaking havoc within the system. We're seeing more volatility than ever, and currency wars are always in the midst in this regard. The latest step, the London Metal Exchange, the world's largest venue for trading metals, where 15 trillion was traded last year, is to accept the yuan as collateral for the banks and the brokers that trade on its platform. That's joining the US dollar, the British pound, the Japanese yen. And basically, it's going to get in with the big boys right now. Very important to note this right here. And this individual, the chief executive, said in the commodities area, it makes absolute sense to start providing renminbi-denominated services. It's on its way to becoming the most widely used currencies. We are talking about huge news, a huge shift in power away from the West into the East. We're looking at China to become very, very powerful. Look at the real estate market. Oftentimes, purchasers are foreign, and they're oftentimes coming from China. They're buying up all the real estate, all the land. They're able to do this. There's a lot of wealth there that is moving in and basically trying to get away and diversify in many instances out of China, moving in to the US and other regions. They have the cash. They're buying up everything in sight. If you found this video informative, please give me a thumbs up. I truly appreciate that very much. When you give me a thumbs up, essentially what you're doing is allowing me to be boosted up on YouTube so that when people search for this type of data, I'm more likely to come up here so we can share the truth. And all you got to do is give me a thumbs up. You can comment down below, and that helps to keep my videos active and will bring the Money GPS to a higher status. So that's why I do appreciate that. People are always asking me, how can I support you? How can I support you? Simply by giving me a thumbs up and giving me a comment. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. And you can actually flip through the book. If you go over to Amazon, they have a look inside feature, which allows you to flip through the book for yourself and see if you like it. Take care.